All right, last week, lots of talk about a recession. Despite that, the markets have gone up. So, are we in a recession? Was last week a start of a new bull market or just another bear market bounce? Lots to talk about today. Sit back, let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor, registered investment advisory firm. So what you hear here, I do apply to clients' retirement plans, pre-retirement plans. So if you like what you hear, please do consider subscribing. So lots going on right now in the markets. As always, we like to start with the cycles and then we go to the chart. So when we look at the cycles, has anything changed? Absolutely not. We are definitively in cycle 4. Growth is slowing all over the place. We are seeing that. Talk a little bit more about that. Inflation decelerates. Now, gave a lot of details at our mid-year event with clients. Show something today, but in fact, we are starting to see disinflation, prices coming down. Going to take a while to hit you and I, nor is this big inflation rate going to turn overnight, but it is slowing down. And then, of course, you've got the Fed. So cycle 4 is one of the more difficult markets, okay? So now that we know where we are, let's go to the big chart. All right, so first up, has the trend changed? This is what we look for from a technical analysis standpoint. What I'm showing here is the monthly chart. Now, last month, July, the best month since 1939. A lot to get excited about, but hold on. June was the worst month in history. Secondly, if you zoom in, July did not close above June. That's what you look for, okay, as far as a trend change. Down at the bottom, momentum. Has it changed? Absolutely not. Still trending to the downside. So, as of now, the long-term trend is still to the downside. Let's take a up close look. So, right now, here is the S&P. Now, when you look at it, sure, the trade, okay, 14 days or less, went up, okay? Do think right now we are overbought, okay? Very much so when you look at relative strength on the top. Down at the bottom we have what's called full stochastics, which is basically momentum. And again, it is definitely at the high end. When you zoom in there, we're looking at 4150. That to me could help us change the trend. We closed about 4130 on Friday, so we got a little bit to go there. We'll see. A lot of movement that has to happen, okay, before we go there. So next up is the Nasdaq, okay? When you look at the Nasdaq, still down 20+%, by definition, a bear market, okay? Have not seen the kind of movement in the Nasdaq. Why? Well, because the S&P has more sectors in it. Utilities, which has done well. Obviously, we know what's happened to energy this year. Healthcare has had a nice bid recently, so S&P has held up. Nasdaq, being tech, has not. But wait, we saw earnings last week. Oh, we're going to talk about that one in a second. So, what do we see here? The one good thing, the VIXN, which is the volatility index for the Nasdaq, is lower, below 30, generally a good sign. But again, I think this is all a bear market bounce at this point. Let me tell you why. First up, let's take a look. This is the NYSE, the full market, okay? The blue line, okay, is the market, the NYSE. The histogram is new highs minus new lows, okay? So as we've gone up, look here, right? So Friday, we had all of -3 new highs versus new lows. You just haven't seen that thrust that you see on the left-hand side of the chart. So we're not seeing that push to the upside at all. Next up, okay, I like to look at this. I showed this last time. Couple factors. Again, this is your SPY, your S&P ETF, so we show actual trading. Okay, first up, the thing I look for, going back to 2020, the VIX hit 86, okay? Right now, we've been meandering between 22 and 30. Really have not seen a lot of volatility so far, somewhat orderly. Next up, the green is volume, okay? Again, you go back to 2020, 413 million shares traded, okay? On Friday, we had 87 million shares. And more importantly, when I see down days, our most recent down day, we did 187 million. So on a down day, 187 million. Friday, up day, 85 million. So not seeing that conviction into the market. Next up, sector spotlight. All right, sorry to interrupt. If you like what you hear, would like to learn more, click a link below. Learn about our 5-step process, right? What are we talking about here? Explore, evaluate, envision, execute, and educate the Loftus Wealth Strategies process. Let's get back to that video. All right, so on the sector spotlight, we're going to focus on commodities first, right? What's happening there? That's really where inflation is coming from. We have seen it come down. It's kind of settled in there a little bit, okay, but it is still moving to the downside. We'll see. Still needs to continue to go lower, obviously, to really feel inflation go down, but that is an overall good sign. The next one is the US dollar. Another reason why I think this is a bear market bounce, okay? The US dollar has really soared, okay? We're going to talk about that more in a little bit, but look how much it's gone up. Sure, we've come back a little bit because it's how it's correlated to the S&P. So as it's gone up, come down a little bit, but it hasn't broken, okay? Again, that tells me the strength in the dollar, okay, is telling me that this is a bear market bounce, okay? Next up, what I called at the beginning of the year, the most important chart. Now, mid-year again, I talk with clients on this. Been a while since I've been on YouTube, but 60-40 portfolio mid-year was minus 16.5%. Why? Well, we know that stocks were down, but bonds have had their worst start in history, okay? Yields go up, prices go down. Yes, you can lose money in bonds, okay? And you can see it go up, but we've been waiting. We've been out of bonds, pretty much had 3% for the last 8 weeks or so, but I've been waiting for a trend change, okay? That trend change happened on Thursday, got to follow through on Friday, and that was our opportunity to add back into bonds for the first time in a while. By no means a full position. We got a long way to go to add to this position, but again, another sign. The bond market's telling us now it's not about inflation, it's about growth. That pain trade I've been talking about is coming into play. Another reason we see that is with gold, okay? When you look at gold, has been kind of dragging, not surprising, all right, when you look at being correlated to the 10-year, but we've had a little bit of life here on Friday. We'll see. We had cut our position last month. Not time to add, okay? Still got a way to go, but gold is starting to come into play. So some of those signs, right, that we look for, the bond market, gold, are telling us that what's happened recently in the stock market is temporary because the bond market is definitively acting in a different manner. Let's go to what keeps me up at night. All right, so first up, what keeps me up at night? Well, not a lot, but when you look at what's happening right there, here's a lot of headlines, right? Strong dollar wreaking havoc, right? We talked about that. Strong dollar means those companies buying our goods and services costs a lot more. So what does that do? That affects the earnings of companies on the S&P, where over 50% of earnings come from overseas, okay? Savings are going to run out, all right? Already battered by high inflation, Fed's high rate will hit lower income. Everyone is hurting out there when you see what's happening with this inflation story. Larry Summers says Powell call on neutral rate is indefensible. He is right. Why? We raised 0.75. Inflation's at 9%. They're still way, way behind the curve. And that is the biggest problem with this Fed. They're not being aggressive enough, okay? Now, interesting, after Friday's close, we got this. Neil Kashkari. Officials are a long way from backing off inflation. Very interesting. This literally released at 4:15 on Friday after the market close, after this big run that we've had, okay? So we'll see what next week brings us. All right, now next up, is this different? Is it a bear market bounce? What I have here, I know there's a lot going on. You can pause it, take a look at the chart, right? What does it look like between 2000 and 2008 and current? You know, in fact, bear market bounces are very common. Ours, this time around, has been really pretty moderate. In the other ones, you've had some 15, 20, 24% bear market bounces. This most recent one was only 11%. So a lot of difference here, but very common to see these type of moves in the kind of market we're in right now. So if I were to say last week, hey, I want to give you a company that's got declining sales and revenues down, would you like that? Well, that's what happened this week with Apple. Everyone's excited about tech, but guess what? Look at these charts, right? It's showing you iPad, Mac, and wearables at the bottom, flat. And here are iPhone sales. Now, that's down, right? But okay, let's look at revenue. Revenue was up 1.9%, and people were excited about that. How? Why? The market's begging, looking for something right now, okay, which is just crazy. You look at Amazon last week. Amazon originally projected 8.5 billion sales for third quarter this year. They just did 3.8 last quarter, and people were excited about that. I don't get it. It doesn't make sense, but this is what the market does, which is why you got to focus on the data, stick with the process. All right, so now, recession. Janet Yellen says she does not see a U.S. recession. Keep in mind, she also said inflation was not transitory. Okay, so going back to 1940, so we've got 75 years of data. Anytime we've had 2 quarters in a row of negative GDP, which we have now, it has in fact become a recession. Okay, so if it looks like a duck, quacks like a duck, you know what I mean? Could be a duck. Now that being said, let's look at some other factors. Talk about this one a lot. 10-year minus 2-year, which is your yield curve. When you invert, go below zero, very good indicator of a recession. We went negative 0.24 this week, closed Friday, negative 0.22. That, in fact, is lower than 2008. Another sign. Staying with the bond market. Like I said Friday, we changed trend, okay? So it's telling me the growth story is changing. It's going to the downside, which again is indicating a recession. All right, now, a lot of people, we're hearing it from the White House and Janet Yellen, well, we've got a robust employment. Yes, employment number is low, but when you take a look a little bit deeper here, okay, we peaked in March. You can see, okay, Thursday, it comes out, 256,000 new claims. Look at that trend. Now, across the board, in tech, all kinds of industries, we're seeing layoffs and also, okay, hiring freezes. The bottom line, like you saw in the original slide, the very first slide, we won't really know for quite some time. What the Fed is doing now, it takes 3 to 6 months. They just started raising rates 2 months ago. It's going to be a while, but the trend, as I like to say, is not your friend. Let's wrap this up with game plan going forward. All right, so my game plan hasn't changed too much, right? Patience, change in trend, right? Now, let me tell you, if in fact the trend continues to go above 4150, we'll add back in. From a technical standpoint, we'll look at that. But the underlying fundamental data does not add up to being any type of bull market at this point. We are at the beginning stages of what you're seeing. One of those headlines, Peter Schiff, it's going to get worse as we go forward, okay? We still have a lot of cash level. That being said, okay, we started to add bonds. So we'll start deploying a lot of that cash to bonds and gold as we go forward. Opportunities, selling the rips. Okay, this might be a really good opportunity. I haven't taken profits at this point after Friday to sell some of those rips. And we talked about the bonds and gold going forward. Okay. Hey, thanks for watching. Michael Loftus, Wealth and Wisdom TV.